All right, thank you. Thank you, everyone. So that's the end of our prepared remarks and presentation. What we will do now is bring everybody back on stage, and we'll open the room to Q&A. If you do have a question, we ask that you just raise your hand, and someone up here will point out who gets the microphone. We have a microphone on each side of the room, so just wait until the microphone is passed to you, and then you can ask your question. So we'll welcome everyone back on the stage now. Bryan here. Yeah.
Yeah, I was going to say, do you want to pass them?
Yeah, if someone could pass a mic
That's all
over
right.
here.
I can MC this. You just do the mic.
While they do that.
Yeah. Put your hand up, Ryan. There you go.
Thank you. I can yell too.
Oh, I
There we
can
go.
repeat your question for the audience.
Very good.
Just shoot.
Maybe to start with, Bryan, just because you ended on the free cash flow, it's been something that I think investors have certainly pushed back here on the company. Meaningful conversion to 60%. My math implies basically all the incremental EBITDA is going to convert to free cash flow. So I guess you laid out the building blocks in there, but I guess the confidence, the visibility, and kind of walk through, I guess, why now the EBITDA is going to meaningfully convert to free cash flow, and then that path over the next couple of years.
Thanks. It's really about that operating leverage and over the next few years being able to scale and getting both the revenue flow through as well as the operating expense efficiency. It's not a straight line to 60. There's certainly a ramp there, but it's not all hockey stick either. And so we feel confident about it because we have a model that is predictable on the cost and the investment side, and also gives us flexibility, as you saw in some of the bridge from EBITDA to cash flow, as well as just the space. We continue to see great growth and headroom for us to outpace that growth.
Jed Kelly, Oppenheimer. Great job today, especially around some of the near-term debates in the industry. Just looking ahead over the next 5 years, you've obviously done a good job expanding your soccer rights, your deals with the NFL. Can you just talk about where you think your rights portfolio is now? Are there any other sports you think about as potential opportunities? Thank you.
Yeah, it's a good question. I mean, I tried to touch on data rights in the sort of closing remarks, but I think what's happened is you're seeing this very significant fragmentation in the market. You've got the major leagues, the likes of the NFL, who obviously have a very strong position in the market. But I think underneath that very, very, very top layer, you're seeing a lot of the sports leagues really struggling. I mean, I reeled off a list. French League One, Belgian Pro League, MLS shortening their deal with Apple. All of those are examples of where the rights model that has historically existed in sport has really come under a lot of pressure. So what we're seeing is new deals that are coming up, and examples of them are the EPFL deal that we did earlier this year, Serie A, and also with IMG exiting the market. All of them are examples of that change that's going on in the market. And what sports leagues are having to do is look much more holistically at the market. They're having to understand that they've got to look for new revenue pathways. They've got to new ways of monetizing that fan, because those old rights models are not working. So from our point of view, we feel very, very confident about our position in the rights space. We've got long-term locked-in major rights deal with the NFL, and hopefully you guys understand how close that relationship is with the NFL and how much opportunity we've got there. Outside of that, we've got a very, very strong portfolio of rights, and more importantly than that, we've got a massive amount of technology that we've now started to deploy across that network. If you look at FIBA in 170 odd countries, you've got our technology that's going to be distributed there. EPFL, we're rolling out over 400 stadiums in, I think, 42 different leagues. We've got an enormous distribution network as part of that that will take our technology and allow us to really lock in that long-term position in the market to get access to the data and really push that evolution of the rights model. So we feel very good about it.
Can I jump in and
Yeah, of course.
as well, Jed, on I guess on some of the things I was saying today, like a bit more near term really, in our kind of core betting bit, which happens today, the betting rights that we acquire and things like that. Like we've got this solid footprint that's really, really great for us. What it really means is we can be really circumspect about other stuff that comes up. There will be rights deals. There are rights deals going on all the time. There's some stuff going on all the time. We can make decisions to say, do you know what, we don't want that. We don't need that. We've got enough in our business, and we can make sensible decisions about how we do that because we can show a bit of discipline. The other thing going on is like, when I talk about distribution and the product power and that, when I look at the competition, they don't have that same level of power, right? They don't have. There's us and Radar who have good distribution, but there are loads of others who play in this space, but they don't have anything like that power, right? And so it's kind of where you see IMG Arena and where that ended up, because it didn't have the distribution power, it didn't have the technology step. So eventually this stuff will evolve, and my own view is actually consolidation will continue, and actually the historical heat in that betting market rights is going to come right down.
Thank you. Mike Cahill, Crispin Capital. Mark, when I think about your ad platform that you've built.
Sorry, can you speak up a bit?
Yeah.
Yeah.
Is this on?
Yeah.
Sorry. Mark, when I think about the ad platform that you built, it reminds me a lot about AppLovin.
Yeah.
AppLovin a few years ago created an ad platform to go after the mobile gaming market. They started small. They were very disciplined about rolling out their technology. But the mobile gaming market is much smaller than the sports betting market. So it seems to me that that would be an interesting analogy to consider. I was just wondering how you're thinking about that.
Yeah, I mean, I'll take that and talk about the sort of size of the market. I mean, obviously the size of the advertising market that we're targeting is enormous. It's, I mean, anyone in the world who likes sports, which is a pretty decent TAM for us to go after. So, you know, we're looking to target that user base, and I think we're very, very well positioned to do that. In terms of AppLovin, I mean, do you want to pick up that?
Yeah, I mean, I'd happy to. I mean, it's fair to draw comparisons to what Genius is doing in AppLovin, right? We're incredibly focused on building not just today's sports experiences, but the next generation of sports experiences. And our whole model is taking our data, building these experiences, and then embedding them into other people's apps, right? And we're already in thousands of apps around the world. And the two things that AppLovin has is unique distribution and audience data on the consumers that are in those experiences. So that is exactly the same path that Genius is on, because we have our identity solution and we're creating experiences that people are desperate to have in their apps, which we create new inventory on to monetize. So we're on a very, very similar path in that regard.
I also think it's fair, it's a very good comparison on another basis, which is that fundamentally, why is AppLovin being so successful? It's because it's able to use huge amounts of data. Not everybody, you know, totally understands exactly what their data is or where it's available to make very, very good investments in the inventory. And I think that's something that, you know, that's very analogous to Genius. We have a very, very strong data pipeline. We have a massive you know, especially with the addition of Sports Innovation Labs, we've got an enormously powerful view of the customer, and bringing that together, I think, gives us by far the strongest view of sports fans anywhere in the world and the moments of sport. And I think that plays a very strong part in us being able to generate very high ROIs for our customers.
Yeah.
Hi, Barry Jonas with Truist Securities. Really appreciate this very helpful presentation. I especially thought the deep dive into prediction markets that Jack gave was extremely helpful. I just wanted to clarify, is there anything embedded assumption-wise in the guidance around prediction markets and how they may play out? Are there any risks in any of those scenarios to hitting your targets? Thank you.
Do you want to start?
Yeah, I mean, I'd start it from a big picture level. I think I laid out in my sort of prepared remarks that it's like it's pretty fluid, right? It's pretty fluid at the moment, as everyone knows, and what can happen can change in quite a short period of time. But it exists. It's there. It exists. It's real. Things are happening. People are placing prediction bets. People are trying to acquire customers. Prediction contracts, not bets. So it's real for us. We've taken a really cautious view of that. Like, as we've modelled out over 3 years, we start really small in 2026, like really, really small in terms of how we're thinking about it in 2026. Like if it flies and some of the scenarios that could play out, will massively outgrow where we've put in our models today. But there's quite a lot of stuff which is really fluid at the moment, so it's very still hard to be super specific on it. But our approach has been a consistently cautious one on it. So if anything, I would be thinking about different developments in the market. It creating accelerated sports betting is a massive major upside from the numbers that you see.
I think the other thing as well is worth noting, I mean, you probably saw Castellani's announcement yesterday. I think they raised $1 billion, and if you actually look at what they detailed that they raised that money for, it was for data and apps. When you think about our business model, and again, it's if you sort of draw back to the diagram that Jack put up on the wall behind us, it showed you the market, but it also showed you where we're already playing. We already sell data to the market makers. We already work with each of these companies on a marketing basis. So the money that they're raising and some of the momentum that's coming in that market is already coming into our business and will continue to do so. And again, that's evidenced by the announcement that was put out yesterday by Castellani. I mean, they're going to need to press their product, drive more marketing. So we feel that we're very, very well placed. We already have the relationships, we have the technology, we have the data. We're extremely sensitive and extremely conscious to work with the regulators and to work with the leagues, as we always have done. If any of you guys have followed us over the time, you'll know how cautious we are in terms of regulation. But that puts us in a very, very strong position to work with those regulators and see that evolution through in a really cautious way, while still benefiting from the space with our other product sets. Bernie.
Thanks. Bernie McTernan from Needham. Great job by the whole team here. This was a great presentation. Josh, I was hoping you could maybe take us under the hood a little bit in terms of the assumptions that go in the assumptions that go in bring advertising media spend from 135 to 500 million. I think the chart in the presentation had like a 50-50 split between the gross and net spend. Is that the right way to think about it? And what should we think about the contribution from the existing 2 agencies that you're signed up with versus signing on more agencies to get to that 500 million?
Yeah, okay. I might take those in reverse. In terms of the agencies, as we said during the presentation, right, these agencies and other agencies in general have hundreds of customers, hundreds of advertisers that they work with. So we're tapping into those demand channels where we're able to work with those, and those come through as sort of advertising briefs based on the seasonality of sports and different things that are going on in those cycles. So our focus with our partners is ensuring that all the different clients across the organization understand the capabilities of Genius, and for us to be receiving all of those briefs that are available. And that is essentially how we scale those agency partnerships. And as we said, those can be everything from a 5-figure sort of activation through to a multi-million-dollar strategic partnership, depending on the needs of the client. In terms of the sort of revenue split between the sort of managed service activity and the self-serve activity, I'd say it's early days for us, right? We're very early on in this journey of self-serve, but as we have said, with the agencies, that is the monetization path that they tend to want to take with Genius. So over time, we expect our margin to increase across the blended margin across the media business to increase. I think it's sort of bit too early days to put a stake in the ground in terms of exactly what that mix will be, but we're on the right path for that to materialize over the next couple of years.
Sorry, I can't see, but yeah.
Jordan Bender from Citizens. Thanks for today. You picked up another win yesterday with FanDuel and the NBA. I'm just curious how much investment opportunity there is out there for leagues that you don't actually have the data rights for moving forward.
Sorry, I didn't hear that. If you guys did.
I
Did
heard the
you-
question. Yeah,
yeah.
I think the question was around how much opportunity is there for leagues where you don't have exclusive data rights? So we talked about kind of the FanDuel, NBA. We've got opportunities on the advertising side of the business, and I think the questions around what's the upside there.
Do you want to say that? Or shall I?
Yeah, well, it's a great example. Like, I mean, with the product sets that we offer are extremely wide and varied. So it's a really great example of we don't have a data rights betting partnership with the NBA, but we still exist in lots of touch points within the NBA. So we work with lots of their teams. We're working with lots of their partners, the FanDuel Sports Network being a really good example. So not everything that we do, not every relationship that we have with a sports organisation is always anchored in sports data rights. You know, sometimes our relationships will go rights first, and they'll evolve into a much wider product set. That's kind of a well-trodden path that we've done. But we're also seeing it go the other way around as well. So our relationship with the CBF in Brazil is a great example of the CBF actually don't own the data rights. We do have the data rights for Brazil for betting, but it's through different organizations because of how their governance structure. But that is fundamentally a performance deal about semi-automated offside, right? Which is great. They're paying some good money to deliver some technology into that ecosystem, into them to fulfill an immediate need. But once we're there, we can then go and create lots and lots of opportunities. So to answer your question, there is loads of opportunity for us that isn't, with lots of sports, that isn't centered on having betting data rights at its anchor.
Yeah, and I'd probably just add to that from a sort of advertising standpoint, right? Like particularly with our identity solution, because we're distributing content into a ton of apps and experiences, we get the visibility of the full sort of fan spectrum, right? And we're able to understand NBA fans, NHL fans, Premier League fans, and it's all from leveraging our sort of technology distribution across the board, particularly with SIL. What we're doing there in terms of indexing sport fandom means that, you know, even at the moment, every day we've got NBA campaigns live. When MLB season starts, we'll be running MLB-based stuff, you know, and yeah, the media business in particular is not limited by it. We are, when we have official rights, we're able to do even greater things, right? But it does not preclude us from being able to run advertising activity with our partners across every sport in the world.
And again, bring it back to where we started this today. I mean, started this Q&A session. You know, the anchoring of our technology in these leagues to provide other services across a backdrop of a very, very dynamic and changing rights industry just puts us in an unbelievably strong position when those rights renegotiations come up. And you get examples of that is, you know, things like the EPFL, Serie A. Those are opportunities where those rights deals have been changed materially, but the technology has anchored us in a really strong position. Mike?
Yeah, thanks, guys. Mike Hickey from Benchmark. Great presentation. Awesome. Just curious on digital twins. I don't think that's in your 28 guidance, but listening to your agency partners, seems like that could be a huge unlock for you in terms of growth of your media business. So just curious sort of how you see the path to commercialization for digital twins and if there's any gating factors in terms of technology or what needs to be done to get completion. Thank you.
Yeah, look, I'll take it from a technology perspective. And I hinted a little bit at my background whenever I kind of introduced myself at the beginning of my presentation. But I spent 5 years at Microsoft kind of leading product for their augmented and virtual reality group, kind of creating industrial digital twins, right? So it's a space that's fairly near and dear to my heart. I think one of the big lessons I learned when I was there was that digital twins are fascinating in terms of the opportunity in the future. You think about kind of headsets that become, you know, form factors like glasses and all of the opportunity that exists. But I think what sometimes people look past is the value that you can create from a 3D digital twin, even on a 2D screen today, right? And we talked about it some, when you look at something like SAOT, the ability to have that digital twin and spin around and see that play from any angle is really, really critical, really important, right? And really valuable. And I think you'll see us from a technology perspective there are some things that unlock bigger and bigger opportunities as we look out on the horizon and you look at all the developments that are happening with the different form factors of glasses. But I think even in the interim, from a technology perspective, we're well suited to kind of take advantage of it today. That example of trick shot that I showed, right, with Etihad and kind of that example is a great example of how you start to create new inventory that extends beyond the field, that extends beyond the traditional broadcast to embed your advertising, your sponsorship into, right, to start to reach sport fans across kind of the various short form content medium, right, that they're consuming today. And so I think there's nothing blocking us from a technology perspective. Over time, it will continue to evolve. The opportunity will get bigger, right? But I think we're well suited to start realizing that sooner versus later.
Just to add to that as well, I think one of the reasons why we're so excited about the agency partnerships that we're striking is that these agencies have massive creative teams, right? And Genius is fundamentally a technology company. And what we're doing in those relationships is we're going in, we're educating the agency on the mesh data, and we're letting the most smartest minds in the world who come up with some of the coolest creative concepts that you see on TV and various experiences, right? They're the guys who are cooking up all sorts of use cases for this data as well in partnership with us. So that's also where, in the future, they're the guys who are also helping us cook up some of these concepts, and they're the ones that will ultimately, buy it from us for their clients and run activity.
Look, and you can't understate, I don't think, how important those innovators are who look at these new medium and come up with new ways to engage. I think back to like in-game advertising when video game advertising first came into being. It was thought leaders like Publicis, right, that were kind of driving new ways to think about that opportunity, and then everyone else kind of followed. And I think these recent announcements we've made have shown these innovators, right, these thought leaders leaning in, saying, hey, we want to be on the forefront, we want to lead, we want to drive, and I think you heard that from the wonderful panelists we had.
No.
Jason Bazinet City. I just had a quick question. You're a relatively young company and you're navigating a very complicated space. And your revenues have been predictable and consistent. But when I think about all of the rights that you have, whether they're official data rights or AV rights or exclusive rights or the rights to put cameras inside a particular venue, it all seems very fragmented to me. Is there an example of maybe a tier 3 or a tier 4 sport where you sort of have the end-to-end, you have all of it, you have the cameras, you have the data rights, you have audio-visual, that you could point to where you've sort of, maybe in dollar terms, it's not large from Wall Street's perspective, but the growth that you've been able to generate has been significant? I don't know if that makes sense, to help paint a picture for what this could look like as it all gets fleshed out.
Yeah. So it's interesting, right? If you walk out into our lobby, right, you'll see kind of the Genius logo in front of this ecosystem that kind of ties this all together. I'm not sure that I'm allowed to say the actual name but like if you think about one of the top, arguably maybe the top football league in the world, who we've talked about a lot today and partnered with, if you look at the interactions and engagements we have with them, we're engaged with them at the foundational data collection layer. We're engaged with them at the performance layer. Every single team, actually, it's all public. Actually,
it's English Premier League, yeah.
Yeah, English Premier League. Every single team uses our performance technology, right? We are actually integrated into their live broadcast, partnering very closely with Premier League Productions as they decided to kind of take their own production in-house last year. We're engaged with them on sponsorship activation. So across the board, if you look at kind of them as the prototypical customer, the arguably one of the top, 2, 3, 4 leagues in the world, like, this is not, again, it's kind of why I said in my talk, this is not product vision, this is actually product reality. And I think you're seeing that, and now for us, as we get these entry points into these key customers, we've got lots of different ways to kind of grow, lots of different ways to get into these customers, which I think is foundationally different than even when I joined just 2.5 years ago.
I think it's really important to think about kind of our strategy on that stuff. Like, we offer an enormous portfolio of stuff to a league, right? Enormous portfolio of stuff, way bigger than any of our competitors. We've got competitors in each of these areas, but our portfolio is enormous from a product point of view, as the guys have talked through today. But certainly I've never really been fixated on only being interested in deals that we start with all of it, because it's quite a hard thing for someone to say, I'm going to just rip over and start with everything. So we have this enormous land and expand strategy where we start with one piece of tech, then we roll in another, and then we start doing more and we start doing more. And we've seen that journey lots and lots of times. We've seen it in the Premier League, we've seen it in the NFL, we see it across lots and lots of sports organisations. So we don't really get particularly fixated about going, we've got to have everything all at once at the beginning. We go, okay, let's get our touch points. This makes sense to us. CBF in Brazil. Let's start with SEOT. Well, from there, I've got the cameras in the stadiums. Suddenly, I'm talking to Globo, who are their broadcast partner. Suddenly, I'm talking to brands who want to engage with them. So it's much more that sort of approach than saying we've got to be everything everywhere from day one.
I would just double down on that in the sense that, and I do grant I am the newest, so I've tried to boil this down as simple as I can to know the encyclopedia as fast as possible. But when you think about the flywheel, which is whether leagues and teams, sportsbook operators, broadcasters, distributors, advertisers, and marketers, it's a good question. Like, EPL is something we wrap the whole flywheel around, but you can enter that flywheel. It's independent. You don't have to be in all spaces, but once we get you in, it's a great opportunity to lead you into other pieces, and it spins faster.
It's easy for us to get in and hard to get us out.
I think we have no more questions.
No more questions? Okay.
Great.
Right. Well, look, thank you ever so much for all giving up so much of your time today. We're enormously grateful. We hope it's been helpful, and we're looking forward to doing another one of these at some point in the future. Well, I am anyway. So thank you very much.
Thank you, everyone.
Thank you.
Thank you.